And his presentation today is going to be on how to time your entries with precision. And, I think we all, whether you're an investor or a trader, that's something that we could all use some help with. Now, Barry, he started learning about the markets as a pretty young man because his father was very active, and he directed, some education towards Barry as he grew up. And his father had accumulated, I think, over almost close to 70 years of trading during his lifetime. And this obviously sparked a fire in Barry, who progressed his trading career. And he went so far as to hire 3 professional traders to personally mentor him so that he could better understand the markets, and even went to work for a former floor trader at the Chicago Mercantile Exchange. Now, all this has culminated in the development of a proprietary strategy that Barry calls the Top Dog Trading Methodology. He's also the best-selling author of Trend Trading for Dummies. He's had numerous high visibility speaking engagements and a ton of professional awards for his approach on how he trades the markets. Now, in today's presentation, he's going to share how to find that perfect entry point every time. Also, he's going to tell us about finding the next big trend, but not just the big trend, how to spot it early on so you could take advantage of it before it becomes totally self-evident. And then he's also going to share that one trading trick that all pros know how to use that we could probably benefit from as retail traders. So with that, let's welcome Dr. Barry Burns to the summit. Good morning. How are you?
Good morning, Jeanette and Raleigh. I am wonderful. How are you both?
We're doing great. I mean, I just did your intro and I'm excited already.
Yeah.
Barry, it's been a long time. I'm excited you're here.
Well, thank you. I'm excited to be here. Thank you for the invitation. And yeah, I've got some really, really good stuff to share, and I'm excited to share it.
Excellent.
Well, you can now share your screen. So let's let you fire that up, make sure everything works okay. There you are. I see you.
You see me? Okay, great.
Okay, so we're going to mute, and you have an hour.
All right, very good. Thank you. Okay, so wonderful. Welcome, everyone. And, trading comes down to 2 things. Where do you get in? Where do you get out? 2 pretty big questions. So today I'm going to talk about where to get in, and it is something that I will say, mastered, and I'm very well known for this, to find precise entries. And one of the benefit of finding very, very precise entry points is you don't get stopped out as often, and you don't have to really worry about, we do have precision where we place our stops and so forth, but as you'll see here in a minute, our stops are very tight, so any losses we have are very, very, very small. And our win-loss ratio is very high because we just nail swing highs and swing lows. So let me get to that right away. First of all, I want to invite people to tap into my podcasts as well, another free thing that I offer in addition to what I'll be sharing with you today. So wherever podcasts are, Google Play, Apple Podcasts, iTunes, Stitcher, Spotify, we are there. In fact, I'm about to come out with a new episode here in just about 24, 48 hours. So let me ask you a question, or maybe I'll ask you a pregunta. Heck, I'll even ask some of you a fragen. Why do you want to become a successful trader? Go ahead and type that into the question and answer, or the chat box, or wherever. Let's see, what do we got here? There we go. Chat. There, I can see it. Okay, awesome. So yes, this is a very important thing, and I'll tell you why in a moment. Oh, by the way, already some people are answering, so that's good. You guys must be day traders because you're really quick on the draw. You're not allowed to give the answer, I want more money. All right, that's the only thing you're not allowed to say. Anything else is fine, but not I want more money. How's that? Okay, so let's see what we got here. My full-time job now, oh, wonderful. Financial freedom, say some people. A lot of people saying freedom, money, buy things, buy a house, retirement income, because I was told a long time ago how few people accomplish it. Oh, so you're taking it as a challenge. I like that. Very good, Mary. Eileen says, I like to do it, always had. Beautiful, you're doing what you love. Suj says, to have a life skill that allows me to be financially free. I love that you talked about having a life skill to be empowered. And Ellen says, it beats being unsuccessful. Boy, it sure does. Absolutely. Carolyn, improved financial. Valiela, oh my goodness, I apologize for not pronouncing your name correctly. Financial independence, absolutely, good one. Jacques, recuperate my losses. Lichtenberg, anything worth doing is worth doing well. I agree 100%. LG, I enjoy trading, flexible schedule. See, I love that so many of you love trading or doing it because you love it. Oh my gosh, Rodney, good one. To be able to teach others like you. Fantastic. See, you've what I'm looking at here is you're all having a purpose bigger than yourself. If you just think about making money with trading, money is not really what we want anyway. Money literally is just pieces of paper. So what we're looking for is, what does money give us? Money is a means to an end. And when we think of trading, if we focus just on the money, it's going to undermine us psychologically. But if you think beyond that, for what you really want, your heart's desire, personal growth, giving to others, these very things that you have mentioned, then you're going to approach trading from a point of view that can actually change your results. So I'm proud of you guys. Good for you. Here's our legal disclaimer. I'm not going to read through all of this, but because we have so many speakers and people come in and out of the presentation, it's important to repost this periodically. Read it on your own, please. If you need more time, feel free to go to topdogtrading.com, click on our legal disclaimer there. But I just want to put this in context that, you know, these legal disclaimers are actually very important. I think a lot of people overlook them because we see them so frequently, they're so ubiquitous, that we kind of ignore them. We think, oh, that's just legalese. Well, I want to challenge you to think of it as education. The regulators have done us a great favor by going out and researching, why do most people lose money trading? And that's the truth. Most people do lose money trading. So why is that? Well, that's what they've done. They've done that research for us, and they've given it to us for free. So if you think of these legal disclaimers that way, as your education on how to avoid being one of the masses of people who lose money, then I think you can appreciate what this gift really is. So look at it that way. There's my ugly mug. Again, I'm Barry Burns, owner and founder of Top Dog Trading. Riley did a great job of introducing me, so I'm going to just zip through this real quickly here. No reason to be redundant. I appreciate his kind introduction there. But yeah, I've been around the block a couple times. So let's talk about what really makes the markets move. I like to take things that you already understand and then correlate them with the new thing that you're about to learn. I think that's a great teaching model. So this sentence right here, I'd rate that down. That's a rater downer. You know why? Because I've been trading for 50 years. You know, Raleigh and Jeanette were talking about we should add up all the hours of all the presentation or all the presenters today. Well, I have actually been trading for 53 years, if you want to be exact, because my dad was a stock trader, and he started teaching me in our dining room table in Detroit, Michigan when I was 8 years old. Knee-high to a grasshopper. So my 52 years of experience are summed up in that one sentence right there. Always and only trade early in the direction of the dominant energy of the market. So what do we mean by that? Well, let's get a little word picture going here. So see these gentlemen whitewater rafting? They are having a ball. If you've ever been whitewater rafting, it's a lot of fun. But it's easy for them to go with the current. It would be very hard for them to paddle against the current. And that's an analogy for the market. The market is all about supply demand. We're looking for an imbalance of supply demand. That's how economies work. When there's more demand than supply, prices go up. When there's more supply than demand, prices go down. Now, there is a money flow that happens there in the exchange between the buyers and the sellers. And that money flow in the market is what makes every market move, whether it's stocks, futures, Forex, options, commodities. That's what makes the markets move. They're an auction place. So think of that river as the current of currency going through the exchange. Current of currency, that is a nice alliteration to it. All right, and in this case, in this example, we have a very dominant current of currency. And again, just like these people in the whitewater raft, they want to go with the flow. Go with the flow. Just like we say in life, go with the flow. Same thing with the markets. Just go with the flow. And most traders, for some reason, actually I could get into detail about that, but not necessary for today's presentation. Most traders have this, including myself in my early years. We always wanted to go against the flow. There's something in us that's contrarian. And that's no bueno. That's not going to work out for you. Just do the easy thing. Go with the flow. Just align with the market energy. And by the way, part of the reason that some people find trading so stressful is because they're always fighting the money flow in the market. So don't fight it. If you can't beat them, and you can't, join them. And then trading actually becomes relaxing. You know, for me, trading is very meditative. When I trade, I'm very centered. I'm very relaxed. There's no stress. It's like meditation. And that's how it should be. Relax and just go with the flow of money. And then what's stressful about that? And most people are constantly fighting it. So how do we do this? Okay, that's the big picture. Now, how do we do that? Well, in trading, we got to put together a statistical probability that puts the odds in our favor. No one tool does that. No one indicator, no one candlestick pattern, no one moving average, no one nothing. We never know the future. We are not predicting. We don't make a profit by being a prophet, P-R-O-P-H-E-T. What we do is we just watch the money flow, create a statistical probability, and I use 5 tools to do that. 5 uncorrelated variables of money flow, and I wait for them all to align. And when all 5 uncorrelated, that's the operative word there, uncorrelated measurements of money flow align, are all bullish, all bearish, then that puts the odds on your side. So I call my method the 5 energy trading method. So before we get into exactly where to enter and exit, I've got to put it in the context of the system, the method. All right, now number 3 is going to be my cycle indicator, and that's where I'll show you how to get into trades with precision. But you don't, again, that's an indicator, which I'll share with you today. It's super simple. But you can't just trade that one indicator alone and expect to make money. No one indicator correlates to money making. If they did, well, then we wouldn't call them indicators. We'd call them money makers. Okay, so because nobody knows what the market's going to do, we have to put together a probability scenario. Here it is. My trading is literally a 5-step checklist, and it's in order, and here's the order. Step 1, we look for trend. What is the trend of the market, up or down? All right, pretty basic, pretty simple. The only distinction here is, as you've heard, the trend is your friend until the end. So that lesson really means that there's a statistical model that says that the longer a trend continues, the less probable it is to continue. Again, talking about probabilities, statistical probabilities. So that means we want to get early into a new trend. So that's step 1. Not just trading in the direction of the trend. That's not enough. The dollars that are in the details distinction is we must get early into a new trend. Going back to that very first statement that summarized 52 years of experience, always knowing to trade early in the dominant energy of the market. Professionals are always in early, amateurs are always in late. Trend is direction. So trends like this woman walking north. All right. So now here's the problem. Sure, she's walking north, but trend is always, in a sense, a lagging indicator, because we would have no idea how long she's going to continue to walk north. She could walk 1 step and turn around and go south, or she could walk another 10 city blocks north and then go south, or something in between. We have no clue. So trend alone cannot be traded. So we've got to add a second energy, and that energy is momentum. Momentum is the strength of that trend. And I remember when I learned this from one of my mentors, and he said, Barry, write on a Post-it note this question. And here's the question, I'll give it to you, and you can do the same thing if you'd like. Is this a strong trend or a weak trend? And he had me write that question on Post-it note, put it on my monitors, and he said, every single time before you take any trade, ask yourself that question. I wasn't even really clear on what that meant yet at the point. And then working with him, he showed me how to determine that. So momentum is the strength of a trend. So in other words, we don't want to trade weak trends. We want to trade strong trends. So here's our word picture for this. Here we got a bullet train. Bullet train, say it's going 100 miles an hour. And it's got a lot of velocity. That's its velocity. And it's got a lot of mass. It weighs a lot. Well, that's what momentum is, velocity times mass. So again, just talking about the energy of this bullet train. Velocity times mass equals momentum. So here's the cool thing. If I were to give you the emergency brake to that bullet train, and you were to press that emergency brake, you know the future. Isn't that crazy? But you do. And it's not because you're psychic, it's not because you have a crystal ball, not because you have an astrological chart, nothing mystical about it whatsoever. It's just pure physics. It's just pure physics. Okay? So that's how it is in the market as well. This is how we determine the future with high probability. We use momentum of money flow. So what does that mean? Momentum of money flow. First of all, momentum or velocity in the market is the speed of the orders going through the exchange. In other words, are they going through buy, or are they going through fast and furious, buy. Okay, that's velocity of orders going through the exchange. And then the mass part of equation in the markets is volume. What's the weight, so-called weight of those orders? Are they, little 10 shares, one contract, one lot? Or are they big, massive orders, 10,000 shares, 100 contracts, 100 lots? Institutional trades. So when you got money going through fast and furious, and you got big, huge volume behind it, that's the equivalent of momentum in the markets. So 5 uncorrelated energies are these. Number 1, early in a new trend. Remember, not just trend, but early in a new trend. Number 2, strong momentum. That's a leading indicator in the sense that when momentum starts to slow down, direction doesn't stop immediately on a dime. It takes time. Just like pressing that emergency brake, the direction of the train continues to go north for a little while. Maybe a few hundred yards, maybe a mile. We don't know exactly. We don't have to know. All we know is the move's coming into an end. Get out of Dodge. Okay, leading indicator. Number 3 is our cycle indicator. So this is the indicator now I'm going to share with you that helps us to time our entries with precision. But it doesn't come into play until step 3 of the system. So we don't even look at this cycle indicator. It's very important. And I know because I've done this before and people get enamored with indicators and they think, oh, great, I got this indicator now and I just trade this. No, you don't just trade it. It's one piece of evidence. It's almost like a court case. We're putting together pieces of evidence to establish a preponderance of the evidence. So we've got to have 1 and 2 first. These are in order. My method's literally a 5-step checklist, starting with 1, ending with 5. Once we're early in a new trend, and that trend is strong, then and only then do we even want to enter a trade. So then we look at our cycle indicator to determine time to get in, and we want it to be bouncing off support resistance, energy number 4. And then we look at the next higher time frame, and that is our final filter. And that filter is we want to make sure that, again, momentum on the longer time frame is also going in the direction of the trade. So we've got momentum on the long term, momentum on the short term, both behind us. That market's going to really haul patootie. Okay, and that's what we want. We want to be in patootie hauling markets. All right, so let's talk about this indicator, and I'll show you how to get it set up on your charts. It's super simple, because really all we're going to do is modify an indicator that's already on your charts. Nothing, you don't have to buy this indicator. You don't have to mess with technology of importing it or any of that stuff. It's a modification of an indicator you already have in your charts, called the good old-fashioned stochastic indicator. So the good thing is you can use this. I saw, some questions before about technical support and, chart supported, trading platform supported. This, it's already in your charts. You don't need any technical support. Every trading platform I know has the stochastic indicator. So we are going to modify it though. We are not going to use it in its default form. So here are the inputs we're going to use. Obviously, write these down. Period D, we're going to change to a value of 3. Period K, we're going to change to a value of 5. And smoothing, we're going to change to a value of 2. Now, in different charting platforms, you might have slightly different labels there, especially that last one. Sometimes it's called average length or slowing. So those are all synonyms, though. Smoothing, average, length, slowing, those 4 terms are all synonyms. So don't worry about it. Literally, it means it's a moving average, but it's a 2-period moving average. But those are the inputs. All right. So now that you got those set up, let's talk about how to trade it. Because just setting that up on your charts, it's still going to be a little counterintuitive. Most people trade it wrong. So let's go into a little tutorial here on how to trade this indicator. So we're going to trade patterns on the indicator. Similar as to we trade price patterns, triangles, wedges, head and shoulders, double tops, those sorts of things. Well, there's certain patterns on the indicator that are going to trigger us into a trade. I call these momentum shift indicator patterns. Notice we're bringing momentum back into play here. And there's 6 of these momentum shift indicator patterns we can trade. What they do is they provide extreme high probability that you found the final cycle low to buy or the final cycle high to short. And by getting the final low or the final high, well, the practical benefit of that is so you don't get stopped out so easy. All right, so let's look at this and let's show you what it looks like. So typically with the stochastic indicator, and here's what it looks like as modified, we have been taught, or at least I was taught back in the days of yore, in the olden days, that above, and oh, by the way, we put in our so-called overbought and oversold lines at 20 and 80. 20 and 80, so you might want to move those a little bit too. But I was always taught that, okay, this down here would be called oversold. Market would go down here, be oversold. K would cross above 20 or cross above D, first of all, and I'd be taught, okay, that's one buy trigger that you could take. And if I did that, you look up here, yep, that one didn't work out so good. Market kept coming down. Another buy trigger I was taught is when K crosses above the so-called oversold line. That didn't work out so well either. And I got very frustrated by these. I mean, I'd buy this oversold signal, get stopped out. Boom. I'd buy that oversold signal, get stopped out. I'd buy that oversold signal, went up a little bit, get stopped out again. And so pretty soon I'm thinking, this is no so bueno. You get stopped out 3 times in a row, and any of you have been trading with real money, 3 strikes, you're out, right? This is not good. And you start to wonder what's going on. In fact, I don't know if any of you felt like this, I felt like I was always on the wrong side of the market. And it wasn't even like a toss of the coin. It wasn't even 50-50. It wasn't even chaotic or random. I was wrong so often that the odds were always on the other side of my trades. So at least there was a probability scenario to be had. There was some sort of order to the market he was just on the other side of my trades. So I was like, I even told one of my mentors, I said, your work is cut out for you because I'm a perfectly imperfect trader. Have you ever felt like that? Like if you just took the other side of all your trades, you'd be a millionaire? Well, that's how I felt. And I thought, this is just nuts. To be wrong this often cannot just be random. I mean, this cannot just be, for no reason at all. To be this consistently inconsistent, there's got to be a logic behind it. And so I actually came up with conspiracy theories. I thought my broker's trading against me because who can see my account? Who can trade against me? Well, my broker. I actually pulled out. I went so far as to pull out my paperwork with my broker, read all that legal stuff, which very few people do, and I had not until then. Sure enough, I found a clause in there that said that my broker reserved the right to have positions on the other side of my trades. Aha, found the answer, I thought. That was not the real answer. It's like, of all their clients, they're focused on me. No, that was a little egocentric of me to think that. And then I thought, oh, I've heard that the floor traders and the market makers, they'll run people's stops. I'm like, oh, that's it. They can somehow see my stops and they're running my stops. Again, like I'm important to them. So nope, none of those were the answers. The answers lied very much elsewhere. And that is that calling this overbought, oversold is a little misleading. So George Lane, who created the indicator, he bounded the indicator. And I knew that. Now, when George Lane created the indicator, he didn't draw lines like this on a chart. That's not how he created it. This is not the indicator, actually. These lines are not the indicator. The indicator is a math equation, or if you want to be real literal, a math function. And so that's what he did. He wrote a math function. So I said, well, let me look at it directly. Let me pull the veil behind and let me look at this indicator directly with my naked eye. So that's what I did. Unfortunately, math was always my worst subject in school. I mean, really dead last, worst. So I didn't understand everything I saw there when I looked at the math equation, but I did understand two things. I could see that George Lane wrote in artificial ceiling of 100 and an artificial ceiling of 0. And what do we mean by artificial is this, that the only reason that K, we'll just talk about the upside here for right now. So the only reason that the indicator can't go above 100 is because, well, George wrote a line in the code that said it can't go above 100. He just wrote it in. It's an artificial ceiling. Has nothing to do with price action, market movement, acceleration, volatility, volume, nothing. The only reason I can't go above 100 is because, well, frankly, George said so. So it's an artificial ceiling. Now, what does stochastic measure? George Lane created it to measure momentum, strength. So when you look in technical analysis books, it'll be located in the momentum indicator section. So really what this means is when the indicator goes up and smacks its head against the artificial ceiling of 100. What that means, this is the most bullish momentum indication. The indicator is mathematically allowed to plot on your chart. You know what? That's a good writer downer too. Let me say that again. It's a long sentence. I'll say it a little slower. Bring up my arrow again. When K goes from 0 to 100 for the first time, that's important. When K is the black line, K is your actual stochastic line. When K goes from 0 to 100 for the first time, that is the most bullish momentum strength indication. The indicator is mathematically allowed by George to plot on your chart. So this move up here is a strong impulse move up. Nothing overbought. Now this would be overbought. No, nothing overbought about this. All right, when I was in Chicago, this was way back, long time ago, back in the days of yore, when all the pits were open and everything. But it was cool to be able to see that because I could look over and see the guys in the pit, and that's the real market. Again, just like this is not the real, that's not the indicator. These bars are not the market. They are a representing or a mapping of market action after these dudes do their buying and their selling. And then it's plotted like this. It's mapped. But that's the market. Okay, now of course a lot of things have changed since then. We got algos and high frequency trading computers and all that kind of stuff. But what I saw was, well, let's take it real literal again. I'd look over there in the pits, and boy, those were the days. But you'd see these guys going in there, buy, 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 buy. You can kind of almost see the emotion. You could feel the energy viscerally in the pits. We're talking about the energy of money flow. You could feel it viscerally when you were there physically. So that's the velocity of the market. And then I'd look at their badges and we'd see like Goldman Sachs, Merrill Lynch, Citibank. What's that? That's the mass part of momentum. Velocity times mass. So you get those guys in there and they're buying, 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 buying. And it's mapped by the indicator like this. Why would you ever sell that? That's what I was doing. That's why I was wrong all the time. This is why I thought, oh, it came up with all my conspiracy theories. No conspiracy theory. It was just I didn't understand this indicator as well as I didn't understand other indicators, or frankly, I didn't understand much of anything of how things logically work. I was just taught, some general stuff, and I traded the general stuff, but I never got into the details. The dollars are in the details. These guys, believe me, they know what they're doing. This is not a game for them. They're very, very serious. So why would I ever short this when you got all the big players in there, Goldman Sachs, Merrill Lynch, Citibank, they're buying? Why would I short this? Is there any good reason? There would be one good reason. And that's if I wanted to buy all the big boys some more yachts. If I wanted to buy them more yachts, then I should definitely short that. But I don't know about you. Actually, I probably do. I don't think you want to buy them more yachts. Heck, I don't even want to buy myself a yacht, right? I got 2 girls in college right now, 2 girls in college. That's expensive, right? I care about my retirement. I care about my family, my extended family. I care about my charities, my church. I care about, a lot of things that I got to take care of that I am the provider for. Let them take care of their own yachts. Okay, they got 99, let them buy their 100th. Okay, I have my own priorities, as you did. And this is why, too, I asked you, why do you want to make money trading, right? Because if you focus on that, it'll help you be more conservative, more serious, and it will help you to become more enamored with the details of trading, because you realize what you're trading for is very, very serious stuff. I like to make my little stupid dad jokes along the way of learning something serious, but bottom line, this is very, very serious. And so don't take it lightly. You're not going to learn this. You're not going to become a professional trader by studying freebie stuff on the internet. You need a professional education. These guys got it. Who did they learn from? They learned from the best trader at their firm who went before them and is passed down from one professional trader to another. That's how they learned. And that's why they're good. And they're also very serious and they study. And they're brutal. They're brutal. It was an interesting place to be. Anyway, so this is strength up, weakness down. Strength up. Again, now, how do we trade this with precision? So we got our entry here, got our entry here. Let's talk about exits. Higher high on price, lower high on K. Those are the 2 dots there. That's what we call a mini divergence. That's one of your momentum shift patterns I was talking about. So price makes a higher high. K, the black line, or the gray line there, makes a lower high before price. So the bullet train's going up, the bullet train's going north, and you could think of it like this. The emergency brakes put on the bullet train here. So the bullet train still goes a little further in the same direction, trend continues, but momentum's come out. And so money is now shifting from the strong hands to the weak hands. That's why there's still a little bit of a push up. But yeah, as it goes up again, more strength. As it goes up to the final one, Goldman has left the building. Merrill Lynch, off to lunch. Those guys, they're done. Okay, again, these are old pictures, obviously. They're filled out with their literal cards. But this is what it means, and this is how it's mapped on the charts. And so this is where, boom, I'm out, done, over with. Or maybe take a short, reversion back to the mean, or more. Okay, so that's how we do it right there. Boom, these mini divergence patterns. I call these mini divergence patterns. They're not regular divergences, by the way, are taught between cycle highs. So this is the distinctions. Not regular divergence is taught in most courses. So Wealth Charts plots these automatically for you. There's other charting platforms that can do this as well, but you can just see them. It's easy to see. So we're looking for the alignment of 5 uncorrelated energies, and this is the operative word here, uncorrelated. This is not to be confused with just putting any 5 indicators on your chart. It's not what the 5 energy method is about. I've had people do that, and they send me a screen capture, and they say, hey, Barry, look, I created my own 5 energy method. They got 5 indicators on there, and I say, well, I respect your ingenuity. I respect your work ethic. Good try. But what you got, my friend, is 5 trend indicators on there. So you're only measuring one energy of money flow with 5 different instruments. That would be like putting 5 speedometers on the dashboard of your car. None of us would do that because we understand that, what a speedometer measures. But most people don't understand the indicators they're using. They don't understand the math behind them. They don't understand the money flow that they're measuring, when they're significant, when they're not significant, which signals are reliable, which signals are just meaningless. And that's why you got to deep dive into it, so that when you do use tools on your charts, they are uncorrelated. Each one's uncorrelated to the other 4, because that's what puts the odds on your side. That's the whole deal. So step 1 in the Top Dog Trading 5 energy method, get early into a new trend. Has to be early. Professional traders are early, amateurs are late. Step 2, if it's a strong trend, we're still interested. If it's a weak trend, we're not interested. Not all trends are created equal, and we only trade strong trends. Why? Because they're the ones that follow through. That's what gives us the reward part of the risk-reward ratio. We want big winners, and for big winners, we need to have velocity of orders, a big volume coming through. Step 3, once we got 1 and 2, now we have, going back to our original analogy, we've got that whitewater river experience, or a raging bull market, a raging bear market. So once we have the right kind of market condition, as defined by steps 1 and 2, then we have a market we want to trade. So then and only then do we even look at our cycle indicator. Then we look at it and we say, okay, do we get one of our momentum shift patterns on %K? So I just showed you real quickly the mini divergence pattern today. By the way, it's literally forms within 5 bars at a single swing high or a single swing low. And that's why we changed K to 5. Because, again, indicators are math equations. So we changed it to 5 so that, and if you look on some charting platforms, it'll even say K length. So we did it because we wanted to measure momentum shifts within 5 bars within a single swing high. Now, that's one of the momentum shift patterns. There's 5 others, because you probably noticed not every one of those swing highs and lows had a mini divergence. And you were right, they don't. They're very observant. So I'll show you how to get the other 5 here in a moment if you're interested in those. We need those cycle high and lows bouncing off support or resistance. And then number 5, the final thing, but the most important of the 5 energies, is looking at the next higher time frame and making sure, again, that momentum is going in the direction of our trade on the higher time frame. That way we've got strength on the high time frame, strength on the low time frame, both going in the same direction. And this one actually has veto power. This is a filter in our trading system. Because, well, think about it. If you're going long on a short-term time frame, you look over at the long-term time frame and momentum is bearish, You really want to trade against bearish momentum on the longer term time frame? No, you do not. So the method is very robust and adaptable. It works pretty much for any market. I mean, all markets are auction places, bids, asks, buys, sells, and supply and demand. So because of that, it's a universal trading method. Stocks, forex, futures, commodities, options, works for all of them, because all we're really doing is measuring the imbalance of supply and demand. And it works for any time frame. The time frames are just fractals, and the indicators that we use, everything, it just adjusts to whatever time frame you're looking at. Day trading, perfect. Swing trading, do it all the time. Investing, I manage a pension plan. It's simple, it's objective, and we're just counting to 5 all day long. 1, 2, 3, 4, 5. After a while, actually, you don't even count to 5 anymore because the patterns become so clear and obvious to you that they get ingrained into your nervous system. So for me and my students, we just can look at a chart, eyeball it for like 2 seconds, and pattern recognition kicks in after repetition. So you've been at your computer, your mobile device, whatever you're watching this on, you've been given my cycle indicator, you see how the 5 energy method works. Obviously, I call it the Top Dog Trading 5 energy method. Real creative, right? Real poetic. It's significantly or specifically designed to help you find the trend. I show you exactly how to do that, how to get early in that trend, how to provide well-defined entries and exits. I've just given you a little taste today. That's all I've had time to do, is just to give you a glimmer, a tip of the iceberg. But when you are able to nail cycle highs and lows, and you're able to catch these raging bull markets, trade with big follow-up after you get in, guess what? That improves your trading psychology. So you can trade confidently, fearlessly, and stress-free. People ask me all the time, I know technical analysis, but my mind is betraying me. I'm always doing the thing I don't want to do. I don't know what's going on with my brain. I'll tell you what, you could do all kinds of trading psychology things, and some of them are really good, and you should do them. You should. But there's nothing that'll help you with trading psychology more than this: making money. When you start making money consistently, all of a sudden, trading psychology issues just kind of all evaporate. Then trading becomes fun and no stress. Making money is not stressful. Losing money is stressful. So if you want to have an objective strategy with step-by-step rules to have more confidence, to have more clarity and peace of mind, then this is specifically for you. So what I'm doing for this special summit, for this get-together, I rarely do this. I don't even do this webinar anymore normally. I brought it back just for you guys, for Raleigh, for Jeanette, because it's very, very special. If you go to my website, you'll see that, wow. In fact, you're welcome to go to topdogtrading.com and go to the product section, and you'll see what I charge there. What I'm going to offer you guys is a tremendous, huge discount. It's my best offer. Just ask if this would be a no-brainer investment for you if you could get your investment back today in just 2 or 3 trades, because that's how I price this. With the philosophy, I want you to get your investment back today, one-time investment, one time, no ongoing, no monthly fees, no annual fees, no nothings, and get your investment back in just 2 or 3 successful trades. And after that, pure lifetime of pure profits for yourself and your family for those things you wanted: time freedom, financial prosperity, retirement security, pay off your debts if that's what you need, contribute to causes that are important to you. And most importantly, I mean, in today's crazy world, security, government's not going to provide it for you. Fortune 500 companies, they don't support people like they used to. Pensions are going away. The only real security in today's crazy world is for you to be self-empowered with a skill no one can take from you. Then that's what trading can do, where you can get up every morning, be dependent on no one, and take a deep breath in the morning and say, I got this. Go turn on your computer, spend an hour or 2, or after work, if you're working. Most people start trading when they're working. You can trade after you work. That's the beautiful thing. There's been no better time in trading than right now. Believe me, I've been doing this for 52 years. It's gotten easier and easier and easier because of technology, because of more markets available around the world, more trading hours. I mean, oh my gosh, I wish I had started trading when markets were like this. So here's the offer. It's a bundle of 7 things that I'm going to give you for less than the price of one. That's how deeply discounted. I don't even know what percentage discount that is, way below 50%. So real quickly, I'll just share this with you and we'll open it up for some questions. So my top dog trading system, part 1. This is how to trade in the direction of the trend, get in early, and find that massive volume that'll push the market in the direction of your victory. In addition, you're going to get all 6 of those momentum shift cycle patterns on the modified stochastic. So we'll review the mini divergence, but again, the mini divergence is fine. It shows up a certain number of times, but there's other momentum shift patterns that occur more frequently and that I like even more. You put these 6 together and you get a lot of trades. You can use it, again, pretty much for any market that has good volume. That's the only qualifier, is you want to trade markets that have professional involvement, because we're relying on them to push the market in our direction. We're hooking our way into the whales, and we're not going to trade against them. We can't. So if you can't trade, if you can't beat them, join them, and that's exactly what we're doing. All right, you'll learn to look at any chart and instantly read the market with crystal clear understanding, perfect for day trading, swing trading, all the objective rules for entries and exits. My second course that you're getting today is the members only momentum indicator. So this is the long-term momentum indicator to know if a trend is strong or weak. Remember, momentum can be a leading indicator, so you're going to see the change in the energy underlying markets before it actually is mapped on the price chart. You're going to get 6 pure momentum trade setups. So even if the market's not trending, then you go to pure momentum trades. These are big, fast market moves, big, fast profits, and I'll show you how to use the indicator on the longer term chart to confirm the trade on the shorter term chart. I'm also including my trading psychology program. This is a manual, it's videos, but what's most important about it is you get exercises here on how to change your behavioral finance. You know, a lot of good trading psychology books are out there, but the problem is it's like reading a diet book. You got to do the exercises. Just reading the book is information. It's not going to give you 6-pack abs tomorrow. So the same with trading. You got to do the exercise. So I give you mental exercises here that I have actually used with traders one-on-one over 2 years. I did a laboratory, by the way, and created these working with real traders, and they work to change people's behavior. And then finally, live trading videos. So you can watch me trading in real time on the hard red edge of the screen, bar by bar, where I get in, trailing stops, where I get out, all that stuff. You also get direct access to me for your trading questions. So I don't just bring you in and leave you to the mercy of the market, because the market doesn't have any mercy. So I'm there for you to support you. If you're one of the first 20 people to sign up, I got a couple more bonuses. My intermediate Fibonacci course. If you don't know anything about Fibonacci, we give you the beginner's course, and then we also give you the advanced course. And then also for the first 20 students today, my Freedom Trades course. This goes into trading all different types of market conditions: channel trading, high volatility markets like we've had, low volatility markets, trend reversals, and how to catch big explosive moves after news events. We have tremendous reviews all over the internet, wherever you see good, objective review sites. We've gotten tremendous reviews from our students. So it's our best offer. It's intended to get your investment back in just a few trades. Everything today, one-time investment of just $4.95. That's 7 items for less than the normal price of just one course. Just my trend trading course, that first one I showed you, retails on my website for $4.97. And what you're really investing is not just courses. What you're really investing is stress relief, peace of mind, time freedom, and financial security. So there's the link. As you can see, it's a special link for today's presentation, EMC, Extreme Market Conditions. And, oh, I see they typed it in for us there already. Awesome. Thank you for doing that. I just typed it in too. Oops, but I only sent it to Jeanette. Okay, well, that's right. Jeanette already sent it out to everybody. So let's see. Yes, you got it there. Beautiful. Thank you for doing that. So what to do next? Just go there, topdogtrading.com/EMC. You'll be sent an email. After you're sent that email, there'll be a link in there to the private members only section of our website. Go on in. You get total access to everything within 5 minutes from now. And so you get instant access to everything. It's all on our members website, and but it's only for this presentation. So I'm not going to read through all of this. I'll just put it all up here on the slide so you can see all 7 things at one fell swoop here. And there you go. That is our special offer. We pulled this out. It's an offer we used to make. We made it, what was it, for some special event. Well, today's a special event. So I decided to bring it out for you guys. All right, well, we've still got about 5 minutes here, I believe. So I'll let Riley and Jeanette kind of guide me through the timing of it, but I am available for any questions that anybody might have at this time.
Hey, Barry, thank you. Thank you so much for that great presentation. And folks, we have Barry for about another 5-8 minutes or so. So once again, this is another one of those rare opportunities where you're one-on-one with a trading pro. So fire your questions away. You can type them in the chat panel, or you can put them in the question and answer panel. And I think, Barry, you can see that where you have access to that.
Yes, I do. So I see Daniel asking, can you use stochastic RSI? Absolutely not.
You had me going there.
Yeah, it's not that it's a bad indicator or anything. I don't think any indicators are bad necessarily. It just won't create the patterns that we trade. So we use and I see a couple of people asking similar questions like that. So if you go into your trading platform and you look at your list of indicators, and there's usually several variations of stochastic. If you have one that's called stochastic full or full stochastic, that's the one you want to use. If you do not have that one listed in your list of indicators, then use stochastic full or full stochastic. Sometimes the word order is different. And that's it, just those two. Those are the only two. But if you have both, then use the first one, stochastic full. Any others don't work. They don't create the patterns that we trade. So no double stochastic, no stoch RSI, no, what else is there? Stochastic momentum index. You know, there's fast stochastic. Nope, don't want to use that one. And again, just because we're trading patterns on the indicator, and it works, you know, these patterns that give us these momentum shifts within 5 bars in a single swing high or single swing low that give us these really, really tight entries. See, remember what's happening here. It's measuring literally a momentum shift of supply demand at a swing high or a swing low. And that's why it's so reliable. It's very reliable for a half cycle. And then after that, we kick in with our longer term indicators to see how much further it's going to go from that.
All right.
Yep. So not meant for catching, like, you know, the final low of a, you know, a huge trend. It's just meant for catching individual cycles, individual swing lows and highs within a trend. All righty, let's see. Could it work with certain cryptocurrencies? Franco, I have not tried it with those. I have students who have tried it, and they tell me that it's worked very well for them, but I cannot personally vouch for it. Let's see. You showed us your strategies, but not your performance. How can we trust your system to work? Well, try it. We've got a 30-day money-back guarantee. I mean, I could sit here and tell you, I could Photoshop, you know, broker statements, and it means nothing, right? People do stuff like that. Some people do that. Unscrupulous people do that stuff all the time. So you know, they'll tell you it works, and they'll doctor stuff up. Or another scam is they'll open 20 brokerage accounts, and 19 will lose money, 1 will make money, and that's of course the one that they show. So none of that stuff's really trustworthy. The only way you're going to really know is to try it for yourself. And
Good
hey,
point.
one person might make money with the system and another might not. It doesn't mean the system's no good. Maybe it just doesn't fit your personality, or it just doesn't resonate with your brain cells. And that's okay. I've got friends who trade all kinds of different methodologies. And some of my teachers have taught me theirs, and I didn't like it. I just didn't, I don't know, just didn't fit me. But it's not that they were bad people. It's not that they were bad traders. They were making money. But, like for example, well, I'm not going to give any specific examples, but yeah, you got to find one that resonates with you. So try, and yeah, we'll give you a 30-day money back guarantee, and no questions asked, by the way. We're on the honor system. I just ask that you really try it. You've got my email. I'll give you my email once you become a student directly to me. Ask any questions, send any screen captures that you want, ask me questions about charts. I'm there to support you. So all we ask is that before you ask for a refund, just give it a real college try. And again, we're on the honor system, so you don't have to send us any broker statements or proof of anything.
Sure.
If you don't like it, fine, you get your money back. Okay, but that's only the real way to do it. What about MACD? Okay, see, when people start asking me about individual indicators, they can all be used. I've got friends who use MACD, I've got people who use CCI, I've got friends who use RSI, LMNOP, QRST, whatever acronyms there are out there. There's a million of them. I'm sure they can all be used well if you understand what the indicator really measures, when it's appropriate to use it in conjunction with other things. That's why I put a lot of emphasis in this presentation on do not get enamored or myopic with any one indicator. No one indicator makes you money. I don't care what it is, including the modified stochastic. It's one piece of the puzzle. It's one piece of evidence, but one piece of evidence is not enough. We need to put it all together. And even then, we don't have certainty, but we do have probability. Let's see, my platform had the number 14 listed. Is this the correct time frame? No, so that's a good question. So 14, you want to change to 5. That's the one you want to change to 5. Doctor, what if I only need the strength indicator? You've talked about how much can I get it? I love you, doctor. I love you too, Bio Padre. What are you doing Friday night? I think you've already got it, my friend. I think you've already got it. I remember you. So I think you've already got it. Yeah, email me. You got my email address. Let's see, stochastic full. Oh, it is on wealth charts, Daniel. Yeah, stochastic full might not be. You know what? Is it okay if I put my email address in here? Is that acceptable?
Sure.
Yeah.
Absolutely.
Okay. So let me put my email address in here, and that way, any questions anybody has, you can. Let's see. Here we go. All panelists and attendees there. So yeah, you can send me an email, and I can give you guidance on wealth charts. I'm familiar with wealth charts and my indicators on there. In fact, actually, yeah, that's right. They created a custom indicator for me on wealth charts. If you already have wealth charts, you have access to my custom stochastic indicator for free that actually plots the mini divergences. So go on there and look for the Top Dog Trading cycle indicator. It's
All
there.
right.
Yeah, Rob did that for me.
Well, that's great. Well, I tell you what, Barry, we're coming to the end of the session right here. But I think you've done a fantastic job with your presentation. The comments that came flying in here were just tremendous. Folks, you do have Barry's email address has been posted in the chat. I know you have follow-up questions, so send them to them there. We also, all these transcripts are being saved by us. So we're going to share all the questions, with the presenters so they have the opportunity to get back to you because so much has come in. But Barry, I want to thank you so much for the time that you spent with us today and for giving that fantastic presentation and also that special offer.